CPI data came in a bit better than expected. So in today's video, we're going to take a look at the S&P 500, the NASDAQ 100, the Russell 2000, the dollar, the VIX, the bonds, and the next steps for tomorrow, the Fed meeting and the federal funds rate. All right, so without further ado, let's get started with the video. First and foremost, this is the CME Fed Watch tool that tracks the probability for a Fed rate hike or a change in interest rates probability. So we have a 92% chance that for tomorrow's meeting that we're about to have for the FOMC, right? There is a 92% chance that there's not going to be a hike and there will be no change. And there's only an 8% chance that we will see a hike. So this tool is very, very good because you could look at every single meeting in the future and you'll be able to see, okay, what is the percentage chance that we'll have no change, what probability, and what probability will we have a hike. So essentially what this is showing us is that the market has really baked in the fact that we're not going to get a rate hike, which is good for the stock market. And when there's no rate hike, it means that the stocks should be rising. Okay, so let's take a look at what the schedule is for tomorrow. So for tomorrow morning, we have PPI data coming out at 8:30, and then at 2 o'clock, that's when the major news comes out. We have FOMC statement as well as the federal funds rate coming out, and then the most important thing, in my opinion, is going to be the 2:30 p.m. meeting for when Fed Powell is going to be speaking. So Powell, his speech is going to really, in my opinion, it's going to determine the next steps for the market. So we already have basically a 90% chance that we aren't going to get a rate hike. But his vernacular, his tone, the words that he uses in the speech, the press conference, is going to be very, very important. So this is going to be one of the main, definitely going to be like the main attraction for tomorrow, in my opinion. All right, so definitely during that 2 o'clock, 2:30 period, do not overtrade. It is not a time to be very, very dramatic in your position sizes, nothing. It's not going to be safe. It's going to be extremely volatile. All right, next, with that being said, let's go ahead and take a look at the daily chart on the S&P 500. All right, so here's a daily chart of the S&P 500. And let's just give some context on what happened in the past few weeks. All right, so number one, we were consolidating between this range between 410 and 420. Okay, we ended up gapping up, and we ended up gapping up here, right? But we never came back and closed this gap. Okay, so that in and of itself is extremely bullish. We opened, closed outside of the upper level of the Bollinger Band. That was extreme overextension to the upside. And then what happened was we ended up consolidating at this level of support. We consolidated at support after a big move to the upside, normal stuff. And then this candle here on Thursday was a very, very bullish candle. We had a bearish candle on Wednesday, right? This big red candle. And then the next day, right after that, we had a very, very bullish candle. Then this candle basically was a really good indication that the move to the upside was going to continue. We ended up gapping up on Friday, then we gapped up Monday, and then we gapped up again today. So clearly there has been extreme strength in the market. Now, what I'm looking at is this 437, 438 level. And this is a very, very important level of resistance from quite some time. So essentially, back in July of 2021, as we broke above this level, this worked magnificently as a level of resistance as well as a level of support. So back in July, as we broke above this level, so it acted as resistance, we clearly failed here and we fell dramatically, right? And then we reclaimed it. It acted as support, and then we went up. We fell below it, reclaimed it again, then we just shot up. So this level has been acting very, very well as a level of support and resistance. So we're currently at that level right now. And my point is that with the SPY at this important level of resistance heading into FOMC, essentially, in my opinion, there are not that many main like solid levels of resistance above. Obviously there are levels of resistance, but this is a very important level of resistance, and if we can reclaim this, many people are going to start becoming bullish. The thing is that it would have paid way more, obviously, in terms of swing trading and everything like that. It would have paid way more to be bullish down here at 413, 420. We did not long into these opportunities, right? But the thing is that now, if the market ends up closing and breaking above 440, if the SPY ends up breaking above 440, everybody will be extremely bullish. Okay, so also depending on the vernacular in tomorrow's Fed meeting, if we reclaim and close above this level, especially for 2 days, 445. So now after this, I'm going to look in detail on the different time frames in the past as well to look for better levels of resistance above this. But 445 and 450 are going to be like major psychological levels. If we break above this 438 level, 440, 445, and 450 are like really major psychological levels. And once we get to the 440s, that's when things get really messy, in my opinion. There aren't many clear-cut levels of support and resistance here. Things are very messy during these few months of extreme bullishness. So, yeah, this is just a really important level of resistance. In my opinion, it's tough to be bearish, but it's also extremely tough to be bullish. So what I would be doing right now, since we are now at this huge level of resistance, once again, whenever we were getting into puts, for example, we got into the IWM puts as we were skyrocketing, now is one of those instances where I will definitely start looking to get into puts for at least 3 months out on the SPY. And this is also, this thesis of mine is basically also helped by looking at the large tech stocks that were showing a lot of strength, namely the AI stocks. So we're going to take a look at that as well. But in general, I'm not extremely bullish on the SPY at this extreme level of resistance. And more so, I am short. I am more bearish as we get to these levels, and especially for 2 or 3 months out on puts, in my opinion, on the SPY. All right, next, we should definitely first, before we continue on with the rest of the indices, let's take a look at the dollar, the VIX, and then the bonds. All right, so this is a chart of the dollar. We know that the dollar has an inverse relationship to the market. If the dollar is falling, that generally means that the stock market is doing well. So clearly, the dollar continued to fail at this level of resistance. Very bearish. We broke below it. We bounced afterward, but then we made an even bigger move to the downside here. And then today we ended up wicking lower below all these levels of support. So now things are starting to get a little bit messy on the dollar, and it doesn't make that much sense to start shorting the dollar, in my opinion. It made way more sense to short the dollar up here. Down here is where things can get very bear trappy. Down here is where the market makers are trying to make people bearish on the dollar so that there could potentially be room to the upside. So in general, I don't like taking puts or going short as levels of support break, especially if we have a wick below support. I would only be comfortable being very bearish on the dollar here if we get a solid candle close below these levels of support, not this wick. So this wick is basically the lower candle here. It's not getting a close. Instead, the price fell and now it's bouncing up. So that is not very safe to me, in my opinion. And basically, if the dollar continues falling, then that is very good for the stock market. So in general, we just have to see what is going on with the dollar. All right, next, let's take a look at the VIX. So the VIX, we also know, has an inverse relationship to the market. If the VIX is doing well, that means that the stock market is falling. So what's interesting is that the VIX was rising here, even though the stock market was also rising. So generally when that happens, something has to give way. So what I want to look at here is that the MACD indicator on the VIX got a cross above. Okay, so this is the first day that's crossed above, and generally when the MACD indicator gets one cross above for at least 1 to 2 days, the momentum to the upside is either bullish or neutral. So heading into tomorrow as well, I'm expecting a bullish VIX, a neutral or bullish VIX, and if that is the case, then the stock market should be neutral or bearish, in my opinion, based off of the VIX as well. And last but not least, let's also take a look at the bonds. So we know that the bonds have a more correlated relationship to the market. If the bonds are falling, then that means that the stock market should also be falling, right? So we see that the bonds are painting a very bearish picture here. We're failing at levels of resistance. We painted a very big red candle here. Things don't look good for the bonds. So the bonds are starting to show weakness. The VIX is starting to bounce. And the dollar is a bit in the middle, but we're seeing some bearishness coming out of the VIX and the bonds. Pragmatically, that's what's going on. So with that being said, I now want to take a look at the IWM, the NASDAQ, and the large tech stocks to wrap everything up together. So first and foremost, let's take a look at the IWM. We can see that when you're looking at the percentage gain, the IWM was the biggest winner at a 1.15%. The NASDAQ was only up 0.77%, and then the SPY was up 0.6%. Okay, so the IWM was clearly the biggest winner. It wicked, it broke its highs. It closed above its highs at 187.77. Right, it made a bigger move. It had a high all the way up to 189, and then we wicked, but we failed to close above the 382% fib. But in general, this is looking bullish on the IWM. And generally, when something like this happens, bulls want this to basically remain above 187. Definitely want to remain above 187.70 for a continued move to the upside. And that would be a very bullish move and a continued move to the upside. So those are the levels of support basically on the IWM. Now, right, when you take a look at the NASDAQ isn't really showing that spectacular of a move to the upside. So obviously, whereas the IWM just closed above, right? Basically, like, it just closed above, right? The NASDAQ is clearly much stronger relative to the IWM. And this candle is not something that you want to see at like a level of resistance, with the SPY at a level of resistance, and with an indecision day tomorrow. So this is not really a very bullish candle on the NASDAQ. Okay, so pragmatically, it's not what we want to see. Obviously, we have resistance at 364 on the NASDAQ, and one of the main other reasons why I'm a bit bearish on the NASDAQ is for the following reasons. Let's take a look at the large tech stocks. So let's just quickly take a look at the large tech stocks as a whole to see how much strength or weakness there is. All right, but namely, we're going to take a look at the AI stocks. All right, so for now, Apple, you can see that it's not closing above any levels of resistance. We wicked above the prior level of resistance from yesterday, and we closed below it. All right, so pragmatically, it's not looking too great. Amazon opened up higher, and then we ended up closing below levels of resistance. So Amazon does not look spectacular either. Google, neither does Google. So Google also weak, right? But we have to pragmatically understand that these stocks were skyrocketing. So the AI stocks that I'm about to show right now were skyrocketing. So my point is that there is clear weakness in the winners, and Google is one of them, right? Microsoft is also not showing an extremely bullish move. This is a very similar indecision candle that the NASDAQ painted. Nvidia did well, right? It's showing some strength, right? But then when you take a look at AMD, this is clearly not what you want to see. This is clearly not a bullish setup on AMD. So this is telling me that there's no clear-cut strength out of the large tech stocks, except maybe Tesla. So Tesla is not going to continue like keeping the market up. But my point is that as a whole, right, the large tech stocks are not showing a lot of strength. The NASDAQ is painting a indecisive candle here. The SPY is at a major level of daily resistance. We're also about to close outside of the upper level of the Bollinger Band on a weekly chart on the SPY as well, if we continue climbing like this. So all of these things are showing like a lot of overextensions to the upside. Yeah, man, things are about to get really interesting, especially after tomorrow's meeting. If the Fed comes out and makes no change that is in line with expectations, if they do a rate hike, then the market is most likely going to fall very sharply. And after this, I'm going to do some more charting, and if we get a break to the upside, then we're definitely going to have new levels to look at. But in terms of just what we're looking at right now, NASDAQ showing weakness. The large AI companies, especially AMD, Google, Microsoft, they're not showing that much strength. And Apple is failing to break above resistance. The VIX is showing strength. You know, the bonds are showing weakness. So, I mean, yeah, like it's just, in general, just shorting here 2-3 months out at the money puts, in my opinion, is easy money. But I'm not your financial advisor. This is financial advice. I'm very confident, because even if it were to break above, right, we could melt up to 447. In that case, the longer term puts that we have, I would just average in to 1 month outputs, and then be something basically a bit more aggressive. If this trade ends up going a bit higher, I would average into something a bit more aggressive in terms of the expiration date, and then I'm expecting a drop as we get to this. And if we break highs with strength, the move to the upside is not going to be sustainable, and they're going to try to paint something to be as bullish as possible. And I'm just waiting for that to happen. Do not fall for what the market is showing. Always, like, don't always fall for what the market is showing. If it logically looks extremely strong, generally it's not the best time to go long. It's safer to go long at levels of support, not levels of resistance, and not into a wall of resistance after a move to the upside already happened. But yeah, until proven otherwise, the momentum is bullish. Dips are to be bought, but then in terms of a longer term put play, easy money in my opinion. 2-3 months outputs at the money. Super safe, 3 months outputs at the money. Even if it takes a month and a half basically to fall back down to 420, 425, the puts are still going to be up very nicely, and it's like a safe longer term trade. You don't really even need to think about it. But that's my thoughts. And once again, if we break higher above 445, 450, then I'm definitely going to go short. So yeah, just get a gauge for how the market is. If a lot of people are starting to be very bullish, it's probably not the best time to be bullish. Okay, so just keep that in mind. Same concept with Bitcoin. So remember Bitcoin back when Bitcoin was trading at 15, right? Everybody was super bearish on Bitcoin, and clearly that didn't work out. So like, if the masses are feeling a certain way, if fear has stricken, or if greed has stricken the majority of people, then that's generally not the best time to be feeling that way. All right, so I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. Thank you so much for watching, and I'll see you guys tomorrow. Thank you.